So the US economy is in a recession. I don't think anybody can argue that. A lot of people do argue about the real estate market being in a recession or not. I personally don't think the real estate market is going to dip a ton, but I'm in the minority. A lot of people think the market is crashing or it's gonna crash. So regardless if I'm wrong or right, let's talk about three key strategies to investing in real estate when and if the market is gonna crash. My name is Sam and I own a real estate investing portfolio worth $40 million. I own single family rental properties, I own apartment complexes, and I own self-storage facilities. I also own a company that's gonna flip over 300 houses this year in the St. Louis market. So I've done a lot of real estate investing and I continue to do a lot of real estate investing, and I talk to a lot of people around the country and a lot of people that have been through a lot as well. So I know quite a bit about real estate, but the people I talk to and my connections know even more. What I want to talk about today is some strategies that you can use to invest in real estate that are pretty much recession or crash proof. Of course, these strategies work when things are great, but these strategies also work when it hits the shan. Most real estate investors are either wholesaling, they're fix and flipping, or they're holding rental properties. All three of those work during great times, and the last couple of years have been really, really great times, like historically great times. Things are shifting, so let's talk about how each of those strategies can work and work for you while things are shifting and the market's a little volatile. That's the whole point of this video, is how to invest in the next 6 to 12 months while the market is shifting. The grade of that shift, some people are going to say a lot, some people say a little. Regardless, these strategies will work no matter what the market does. The first strategy I want to talk about is wholesaling real estate. Wholesaling real estate is a great way for brand new investors to get started investing. I'm not a brand new investor, and we're probably going to wholesale 225 properties this year. However, if you are a brand new investor and never invested at all, and you don't have any money, you don't have any credit, and you don't really want to take any risk, wholesaling is a great option for you. Wholesaling is basically selling paper. That's what you're doing. You're taking a sheet of paper and you're selling it. That's why you don't need any money or credit. You get a property under contract to purchase on a sheet of paper, and then before closing, you sell that sheet of paper to somebody else that has money and credit that wants to close on that distressed property and fix it up. So you're kind of acting like a middleman or a middlewoman in a real estate investing transaction. You're like an agent, but for investors and distressed properties. You're connecting the dots and getting paid a fee for doing that. You don't have to close on the property. You can, of course, but you don't have to close on the property. The fact that you don't have to close on the property and you can sell it before the closing table means you don't need any of that money, you don't need any of that credit, and you don't really have to take any risk either if you have a contingency in your contract. So it's a great place for all investors to be, but especially brand new investors that are maybe a little bit behind the 8 ball or don't have the start or the credit that some other people do. Anybody can wholesale, no matter who you are, no matter where you're from. I always kind of joke you can wholesale from jail if you can figure out how to sneak a phone in there. So yeah, you can figure out how to sneak one in. Anyone can wholesale, no matter who you are or no matter where you came from. Once you get into wholesaling, what you're doing at the core of it is you're finding distressed properties, and like I said, selling those distressed properties before the closing table. However, eventually you're probably going to want to get into fix and flip, and you're probably going to want to get into owning rental properties. Both of those things require distressed properties. So what you're doing is you're taking the very first step in all real estate investing, which is finding distressed properties, and you're making money off it by wholesaling. So it's a great place to start. I would suggest everybody starting at this point if they have not. Now, it works in any market, as I stated earlier, but if the market's shifting or dipping or doing whatever it's going to do, this is a great strategy. Because as I said, you're not actually closing on the property and paying a repair crew and fixing it up, so you're not having any risk. So if the market's gonna drop and house prices are gonna go down, you having a wholesale contract with a contingency in there that allows you to back out if you don't sell it, more on that in a second, there's no risk. Why wouldn't you start this process? If you get a property under contract to purchase for $100,000 and you can sell it to another landlord or a real estate flipper for $125,000 and make that $25,000 spread, there's no risk at all involved for you. If the market does shift a little bit during that time, actually, I don't even want to go down that path because the market's not going to shift that much in 2 weeks or a month. However long you have the property under contract, it will not shift that much. Just doing this strategy in itself will help lessen the risk if you don't plan on closing on the properties. Now we'll talk a little bit more about it, but the market can shift over 6 months or 12 months. But Wholesaling is a quick in and out, or in and you don't even get out, you just sell it before you get out. So wholesaling is a great strategy for anybody, but especially if you're worried about what the market's gonna do. You can make a lot of active cash. I think the national wholesale fee is about $20,000. You can make a lot of money without any risk and without any credit wholesaling real estate. While wholesaling can be fun and you can make a lot of money, fixing and flipping distressed properties and putting them on the market and selling them is a lot more fun, and you can make a lot more money. Of course, there's more risk involved, so I'm going to talk about in a minute how to lessen that risk in a shifting market. But fixing and flipping distressed properties, it's a lot of fun. You're taking a property that's, either not livable or just not in the best condition, and you're picking out backsplashes and countertops and flooring and paint colors and fixtures, and it's a lot of fun. It's just like you see on HGTV and all over the internet. However, there's usually not those made-up drama things that happen. A lot of things do happen in a fix and flip process. Managing a rehab crew or doing the work yourself is a lot of work, but the piece of the pie at the end is usually a lot bigger because you're the one taking the risk. You're buying it, you're fixing it up, and you're selling it, and you're making a profit on it. Anything less than you bought it and fixed it up for can be 10, 20, 30, 50, $100,000. You can make a lot of money fixing and flipping real estate. It's a lot more work and a lot more risk, but the pot of gold at the end of the rainbow can be a lot bigger. So that's why people do it. Now, I don't think I need to go into too much more detail about fixing and flipping. I think everybody's seen that and understands the process of rehabbing a property. However, if you want to minimize that risk over the next 6 to 12 months, just do quicker rehabs. I alluded earlier that the market's not going to shift that much in a month or 2 months, but it can in maybe 6 months or a year or 18 months. So naturally, what you're going to want to do is you're going to want to take these properties and only close and fix and flip properties that just need a little bit of work, like a cosmetic type rehab, a property that's going to take you 30, 45, maybe 60 days to rehab, because you're in and out much quicker. Therefore, the market can't shift as much in a short period of time. The real estate market's kind of like a big barge or a big ship. It takes a while for it to get turned around and to make any drastic movement. So just be quicker. Cosmetic surface level type rehabs, $20, $30, $40,000 max. Get in and out, new roof, paint, new floors, kitchen, boom, you're done. Don't get into any walls or moving staircases or any huge projects that are going to take a long period of time, because A, the market can shift a lot in that period of time. Also, a lot can go wrong. You got holding costs, and there's just a whole mess that can go into big, massive rehabs. So in general, we stay away from them no matter what the market's doing, but especially over the next 6 to 12 months, we are only going to do quick in and out rehabs. If we come across a property that needs a ton of work, we're just going to take option one and we're going to wholesale that thing off to somebody else that's willing to take that risk, because there's always people out there that are willing to do that. So find the distressed properties, wholesale them if you want to, or if they're a quick rehab, rehab them. Buying rental properties and creating wealth with other people's money is by far my most favoriteest investing tool ever. It's one of my most favoriteest things ever in the entire world, is growing wealth and creating generational impact using other people's money by buying rental properties. One of the reasons why rental properties are my most favoriteest investing strategy ever is because I do not give a crap what my rental properties are worth right now. If I've owned them for years, they've gone up in value, but guess what? Over the next 20 years, my rental property is going to go up, they're going to go down, they're going to go up, they're going to go down, and as long as I'm managing them properly, which I'm going to do, and collecting rent, it doesn't really matter what they're worth unless I'm planning to sell them. My equity is going to fluctuate every single day. Most days it's going to go up. Some days or some weeks or some months maybe it's going to go down. But I'm not selling that rental property. It's just on the market and is worth less because that's what the market says. I'm not looking to transact on that, so it doesn't matter at all what the properties are worth. As long as you're managing them well, as I said, and collecting cash flow and paying your mortgage, it doesn't really matter, because no matter what the market's doing, the economy, whatever is happening, people still need to live somewhere and people still need to rent. So you have what is in short supply. You have it, you own it. Now you might think, what if I don't have a ton of rental properties, Sam? What if I have one or two, or I want to buy my first one? What do I do with the properties going down in value and the interest rates being super high? Like, what do I do? Well, I would say a couple things. Number one, look at the big picture. You're not going to time the market perfect. You're definitely not going to get in at the low and ride a wave up. You're just going to have to get in and buy good deals. I know a lot of people that bought good deals in 2005, 2006, 2007, when we were at the last height. And guess what? they still own those properties today. When the last crash happened, it happened and it hurt the average people that just own houses that shouldn't be owning houses. But the smart investors that bought good deals during the height were fine. They made a lot of money and they held on to those properties, and they're worth probably double what they were worth then or close to it. Real estate doubles in value traditionally every 15 or 20 years. So I'm not worried about a little bit of an interest rate now, or buying maybe, not quite as on sale as I could be because prices are going to go down a little bit over the next 12 to 18 months. I'm not worried about the little things. I'm going to own this for 20 years and it's going to double in value. So not worrying about every little thing and not trying to have every single deal, especially your first deal, be the perfect home run grand slam deal is a good way to get started. Just knowing that what you own now is going to be worth double what it's worth in 15 or 20 years, and just not worrying too much about the interest rates that have gone up a little bit. If you're running everything properly, you should be cash flowing maybe $250 to $500 a month with an interest rate at 4.5%, 5%. Now that interest rates have gone up a little bit, maybe you're cash flowing $75 less or $100 less a month. If you're doing things the right way, you're still gonna cash flow positively. This is a short-term deal. Interest rates go up a little bit, lock the rates in now. If they go up even more, guess what? You got a good deal. If they go down, which eventually they will, you can always refinance. So just with rental properties, look at the bigger picture, take a step back. Don't worry about trying to get the lowest interest rate possible and get the best deal you can and only buying at the dip. Just buy now, manage it properly, and run the process smoothly, and you will be just fine, and you will be glad you added assets now and didn't wait for a dip that probably not ever come. If you want to get a taste of all three, wholesaling, flipping, and renting, check out this video over here where I walk you through a real life property that we bought from a wholesaler, we fixed up and ended up keeping as a rental property. See you on the next one.